Joining us now first on CNBC is Roku CEO Anthony Wood. Always nice to have you, Mr. Wood.
Good morning.
You talk about obviously running your business more or less at near break even on an operating cash flow basis for this year while reinvesting gross profits into strategic areas that will drive growth. For some reason, the market doesn't seem to like that. What do you tell them?
You know, we had a really strong, fantastic Q4. For example, active accounts were up 44% over 19 million active accounts. And if you just to put that in perspective, you know, if Roku were a traditional cable company, that would make us the #3 distributor of content in the United States, you know, just behind Comcast and AT&T. But our accounts are growing 44% year over year versus those traditional distributors being flat or down. And that's being driven by the large secular shift of consumers to streaming for watching television. And Roku is the leading streaming platform in the United States. We're in a great position. We actually issued a strong outlook for 2018, forecasting, for example, at the midpoint, gross profit to be up 56% year over year. So it's a great time to be in the streaming business, and you know, Roku is extremely well positioned.
All right. Well, all that said, then why is your stock down 19%?
Well, you know, the stock is up a lot since our IPO. Day-to-day stock trading is based on a lot of factors, but there's no doubt that we are at the center of a huge shift in television, moving to streaming, and it's just a great position to be in. And we're just focused on building that business over the long term, and we have posted some great results in Q4, and we offer strong outlook for 2018.
And of course, it is worth mentioning your stock has been a very, very strong performer as well. Morgan Stanley this morning says they estimate, though, daily hours streamed per average active account decelerated, that is the growth there, to mid-single-digit growth in the fourth quarter as the account mix shift continues to move towards Roku TVs, where engagement and over-the-top streaming likely lower versus usage on player-driven accounts. Is that the case? Is that something that concerns you?
Our Roku TV program is really coming on strong. It's a great position to be in to, be a partner with a viewer in the living room, to control the home screen, to help them find content. So if you think about how Roku builds our active account base, we do it by selling players, licensing players, and we do it by licensing our operating system to TV manufacturers. You know, last year, 1 in 5 smart TVs sold in the U.S. were running the Roku operating system, and that was up from 0, 4 years ago. So it's a huge opportunity to be the software platform and the home screen of a television, and we're excited about that. Some televisions do start, sometimes consumers buy a Roku TV just because it's a great television, not necessarily thinking about streaming, and so sometimes some users start out at a lower usage of streaming, but there's a huge opportunity to bring them up over time as, all viewing shifts to streaming. So, players are doing great for us, but TVs are really doing super great, and I think that's a great position to be in.
And I think that's what you guys have been really emphasizing, that shift towards the licensing revenue as opposed to the hardware revenue, becoming more of a software company, to put it simply, versus a hardware company. But the fact of the matter is, Anthony, correct me if I'm wrong, more than half of your revenue right now is still from hardware, and so people are taking a look at the device revenue line decline year on year, seeing that revenue decline, seeing the number of devices sold go up, and are thinking that there is real pressure on this side of the business, which is still a significant portion of your revenues. Can you walk us through the push-pull here that we're seeing between what's going on in devices and whether or not the growth on the software side will be able to offset the pressures in the hardware side?
Yeah, so our business is basically build active accounts, grow scale, and we grew that 44% in the fourth quarter, and then monetize those customers. And so, for us, we do sell players. It's a great way to acquire active accounts. It's a positive gross margin way for acquiring accounts. But we're focused on selling more players, not generating hardware revenue. We're focused on generating our advertising revenue and content distribution revenue. So, for example, average revenue per user, which is the metric we use to measure advertising and content distribution revenue, was up 48% in Q4. So that was huge growth. Player revenue was down, but that's because we are, again, focused on driving player units. And one of the tools we use is bringing down the price as the value of a customer grows, because ARPU is growing. So, it's all part of our strategy. It's working well.
Hey, Anthony, we've asked you before about your appetite to get into the original content game. You've been resistant to it. Has your thinking evolved on that at all over time?
We're a platform for distributing content. One of our goals is to distribute all content available. So, we have no plans to get into originals. Our focus is on helping our partners build audience for their streaming content as they shift their distribution from traditional TV to streaming. And so, we're focused on building tools to allow our partners to build large audiences.
It occurs to me, Anthony, as well, though, that you have access to what could be a fairly valuable trove of data. Is that the case? Any plans on your part, or how do you, in fact, use the data that I would assume is of some value here that is growing all the time, given your growing customer base?
Absolutely, we're a platform for distributing content in the modern connected world, and using data is a key part of that. So we use data in a bunch of ways. One is to offer a better experience for our customers, helping them find content they're going to like to watch. But also importantly, we use data on our ad platform. I mean, we have one of the largest streaming ad platforms in the business. We have a lot of tools built into our platform for us to make money selling ads and for our partners to make money selling ads. And one of the ways we do that is we bring a modern ad platform that uses data for targeting, machine learning to deliver more relevant ads, measured ads, and interactive ads. And so, every ad on Roku that we serve is a one-on-one ad targeted at a specific customer, relevant to that customer. And that use of data allows us to get higher CPMs than you would traditionally in the TV business for our advertisements.
But can you tell us with any accuracy what the most popular Netflix shows are?
No, but I can't tell you.
Okay.
But I'm watching Altered Carbon right now, a Netflix original, which I'm enjoying. It's great.
All right, I got to check that one out. Anthony, thanks for joining us. We appreciate it.
Thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.